Hello, everyone. Welcome. If you're a landlord and you have a mortgage coming up for renewal, or you've already renewed recently and felt that something was off, this one is for you. So stick around because the three things I'm going to share with you will literally save you thousands of dollars in cash flow every single year. Hello, everyone. My name is Sylvia Ho, and I'm a financial landlord consultant. I work solely with landlords to help them save money, reduce the taxes that they pay, and decrease the interest that they pay the banks. So, if you have a renewal coming up in the next 12 months, this training is for you. If you enjoy my weekly training, please comment below, love this Facebook Live, or subscribe to my YouTube channel because this will encourage me to make more of these trainings that put money into your own pocket. All right, let's get at it. The three best practices when renewing the mortgage on your rental property. Tip number one, reset your mortgage on your rental property to 30 years every single time. This is a big one because by resetting your mortgage back to a 30-year amortization, you will, one, can get better cash flow. Two, you can pay less taxes to the government. So let me explain how this works. If you have a $400,000 mortgage, by resetting your mortgage to a 30-year amortization, your mortgage payment may drop by a good $300 to $400 per month. That's literally real money back into your own pocket every single month. This money can be used to have that emergency fund when your property is vacant or for a repair or for a bad month. So if your amortization on your rental property is 18, 20, 22, 25, the responsible thing to do is to reset it back to a 30-year amortization. And this is for an investment property. Another reason that you want to reset back to a 30-year amortization is for tax efficiency. When you reset your mortgage back to a 30-year amortization, it means that you paid more interest for the loan that the bank gave you. By paying more interest for the loan that the bank gave you, when you file your income taxes every single year, you're going to deduct those interest costs. And if your mortgage is reset to a 30-year amortization, those interest costs is going to be higher, which means that you have a lower net income on your T776, and therefore you're going to end up paying less taxes. So the bottom line is reset that clock back to a 30-year amortization. Tip number two, pay monthly. I'm not sure how many conversations I've had, but I've had a lot of conversations where I'm hearing landlords pay biweekly, accelerated, or weekly on their rental property. You can accelerate your payments on your primary home, but do not do that on your rental property. So for those that I talked to this past week that are landlords and you have biweekly payments on your rental property, please, my friends, reset it back to the monthly payment. By paying extra payments biweekly, you are literally just giving the banks more money, and therefore you're paying less interest on the mortgage on your rental property. Therefore, you're going to pay more taxes to the government, and you're going to have less cash flow from your pocket. So you're losing money every single month. So on a rental property, stop doing biweekly payments. Don't make that extra payment to pay down the mortgage faster. Instead, go to monthly payments. And by having monthly payments, it means that you'll have more money in your bank account to cover rental expenses going forward. So with a rental property, you always want to keep as much money as possible in your bank account. Your bank does not need that money. You're going to pay monthly on your rental property. You're going to keep the cash flows in your own bank account. Tip number three, property taxes. Please do not combine your mortgage payment and your property taxes into one payment to the bank. Banks suck at paying your property taxes. You may think that, oh, it is a good feature. I just make my mortgage payment and my property taxes at once and I don't have to think about it. That sounds all nice and dandy and convenient. But the problem is they collect money in installments and they put it into this tax account. And then when your taxes are due, the government sends them a bill and then they make that bill payment. If you have been overpaying your tax account, you are literally losing money out of your account for nothing. So in this tax account that the banks have been collecting for you, you may have $5,000 in there, but your property tax bill is only $2,000. So you have $3,000 sitting in there, just doing nothing, not making you any money, not for you to use, but for the bank to just sit there. Okay. If you collected only $2,000 and your bill is $5,000 for property taxes, then the bank will pay the $5,000, and now they're going to start charging you interest. So the best way is do not bundle your property taxes and your mortgage payment together. Instead, pay directly to the city. If you pay directly to the city, then you will never pay a penny more. You will never pay a penny less. You won't have to pay interest on money that you didn't know you were paying on. So keep it absolutely separate, please. The other thing is by bundling your mortgage payments and your property taxes together, it really makes it hard for you to understand the true costs of a landlord. So keep these two things separate. It makes it much cleaner for the books and what you're actually spending. Now, a quick note is sometimes lenders say, oh, because this is a high ratio mortgage, you need to pay your mortgage payments, your property taxes together. They may say that, but it's not an actual requirement. Maybe after closing, you can talk to the banks and maybe they'll say, oh yeah, that's fine. You can pay it afterwards. But when you signed up for it, you would have to. The other thing is if you have enough equity built up on your property, you can make that switch as well. All right, so let's do a quick recap. When your mortgage is up for renewal, number one, reset it back to a 30-year amortization. Protect your cash flows. Number two, rental property mortgage payments should only be done on a monthly basis. Do not accelerate the payments on your rental property because one, you're going to lose cash flow, and two, you're going to pay more taxes to the government than you really need to. Number three, keep your property taxes separate from your mortgage payments. Pay your property taxes directly to the city, pay your mortgage payments directly to the lender. With these three things, you can make a serious difference on how your cash flow is and you're generating every single month. So at the end of the day, you're going to have more money in your pocket. If you found this helpful, please share it with a fellow landlord. Tag a landlord. Share it. My name is Sylvia Ho, and I'm a financial landlord consultant. I'm also known as the Cash Damming Queen. Watch my other training on how to pay off your mortgage 8 to 12 years earlier than planned. Go to cashdam.ca to learn more. cashdam.ca to learn more on how to pay off your primary home mortgage faster than your current plan. Thanks so much for tuning in, my friends. I will talk to you next week. Bye now.